Inflation in Indonesia accelerated to a 20-month high in February on higher food prices and power tariffs. Indonesia has also posted its first annual trade deficit since the late 1960s. Joining me on the line is Merina Willemse, economist at Efficient Group. Hello, Merina. What effect is high inflation having on Indonesia's economy?
Well, first of all, I think the inflation that Indonesia is experiencing this year might be much higher than what we would have anticipated in 2012. And obviously higher inflation levels will mean that there's a chance that interest rates might have to start to increase soon. And if that happens, this will hurt economic growth. So at the moment, we'll have to see if inflation on a global level comes through, and then we would expect this to come through on an emerging market level as well. And therefore, the low interest rate cycle globally will start to reach its end.
The Indonesian economy grew by 6.2% last year, and the government now aims for growth of 6.8% this year. Is this realistic?
I think we can estimate a little bit less than that, perhaps between 6 and 6.5%. We know that this economy is doing lots to stimulate infrastructure investment, but there's been trouble with getting the money actually into infrastructure over the last few years. Public sector consumption is actually struggling at the moment. Exports is faltering if you look at recent trade data. And we know that the domestic consumption of Indonesia, that accounts for about 50% of their economic growth, is actually also one of the local things at the moment that is risky in terms of what we might see from this contribution to economic growth. So I would expect, if the rate still comes in around 6%, it's still fairly good economic growth in the emerging market space.
Exports are weak because of depressed global demand and lower price for many of the natural resources that the country sells to the world. The result is a collapse in the trade balance. After a surplus of almost $26 billion in 2011 last year, Indonesia posted its first annual trade deficit since the late 1960s. Do you expect the trade deficit to worsen?
I think at the moment the risks are pointing to the fact that it might worsen, yes. If you just look at the global economic landscape, this is again a feature that you can notice in many other export-intensive economies where demand has fallen globally, so we're starting to see deficits coming in from countries that normally post surpluses. So this might be just a normal trend of the time, and I think that as economies start to recover, demand returns, I'm sure Indonesia's surplus will return, but this might only be in 2014 or 15.
The current account too swung into deficit in 2012, ending a 14-year run of surpluses. It has all put pressure on the rupiah recently, one of Asia's worst performing currencies. Do you think Indonesia is heading for another economic crisis similar to the late 1990s?
Well, I don't think necessarily such a big crisis like that. I think that this economy is under pressure, again, like many other emerging economies in that with a similar economic fundamentals. But if you look at Indonesia's situation, they are fairly economically healthy. They've got a very high average growth rate as compared to other emerging economies. They've got relatively low unemployment rates, low interest rates that are supportive for growth in the current economic environment. They have a very low government debt to GDP ratio. They are facing improvement in their industrial production growth. Their business and consumer confidence levels have strengthened of late. And if you just look at the fact that what's going on globally, I think it is understandable that this economy might see a slight slowdown or worsening in terms of its current account in the short term. But I think if there were to be a storm in terms of a global economic, in terms of the global economy, that all countries around the world, especially emerging countries that do export, will face similar problems. And this is a risk to all countries. I don't think it's specific to Indonesia. So I think at the moment, the only real risk that they run is the fact that their consumer demand is slower a little bit. We see that with the retail number being slightly lower, the latest one. And there's also a little bit of concern on the inflation front. But in general, I think that this country's economic fundamentals are in a healthy state that should an international global economic slowdown occur, that this country will probably weather the storm.
Thanks for joining me, Merina. That's all for now, but stay tuned to Dukascopy TV for the latest financial news and updates throughout the trading week. For now, though, goodbye.